Okay, let's roll. We only got an hour together here, folks, so we're going to get moving. By the way, most questions will get answered as I move through the material. So if you pop a question in there, it's not that I'm not going to get to it. It's that hopefully I'll answer it as we move along, but then I'll grab all the questions that we have that don't get answered, okay? So with that saying, good afternoon, everybody. Got a nice group of people here today, and let's figure out if a reverse mortgage can help your business, right? That's why we're here today, to learn a little bit about reverse mortgages. We're going to review how they work. I'm going to talk about what's happening. I always want to update you on the latest with the market and reverse mortgages, including interest rates and where they're at. And then finally, let's attach it into their business, right? Let's get your business to the point where a reverse mortgage might actually help you come up on a listing. So here we go. Let's rock. Okay. I do have an update to my stats, by the way, on this slide. I haven't changed it yet. So one of the things I track, of course, is who's doing loans and who's selling homes, right? Older homeowners are selling and moving for sure. That number has actually changed a little bit. The last studies showed that the average age of a home seller is actually a little under 60 years old, but still pretty darn close. We still see a majority of the homes sold being sold by our older homeowners, right? And like I've been saying for a while, I really started feeling this over the last 3 or 4 years when interest rates were going up, and I had a harder time getting homeowners loans, especially older homeowners that wanted to get to equity, that needed to get to equity to help subsidize their retirement due to the rising costs. Well, as interest rates on loans went up, I was helping less people, and I was talking to them more about selling their homes and their agents selling their homes for them. So that's why I always put this relevant data up there. But it is changing a little bit. We are starting to see maybe not quite as old, people between 55 and 60 becoming the prevalent sellers, which is still interesting to me, you know, that we're getting older and moving towards retirement and still talking about selling homes. This is what I think a realtor should know about reverse mortgages. This hasn't changed too much, maybe since you've taken my last class. But let's review it again. Remember, one of my biggest points is always, which I've learned over the last 17 years of doing reverse mortgages, just because somebody's asking about a reverse mortgage doesn't necessarily mean that they want one, okay? When someone is asking about loans, whether it's a reverse mortgage or maybe even a regular loan right now, I'm pretty sure that that person knows that they're not going to lower their payment. They're not asking about loans because they want a lower mortgage payment. They're asking about loans because they need more cash flow. That's definitely true with reverse mortgages. We want to get to some of that equity. But my point here is that whenever you have anybody asking about loans, it's probably because they're looking at cash out. It's probably because they need to improve their cash flow. It's harder to get loans now because interest rates are up. And so that person that's asking you about a loan may be actually be your listing. Whew, let's get this out, Ryan. Maybe a listing these days. And that leads me to my second point that I want realtors to know. Higher interest rates in my industry mean lower mortgage amounts, especially with reverse mortgages. So what we have is that in the reverse mortgage industry, when somebody doesn't make a payment on a reverse mortgage because they don't have to, we add the interest to how much they owe us. So the balance will go up every month. And we'll cover that in a minute. So what does that mean? If interest rates are higher, I'm adding more interest onto their loan every month. Okay. In our industry, we never want the house to even be close to going upside down. We have a mortgage that's increasing. So the only way we have to help control a house with a balance rising from not going upside down is to lend less money in the beginning. So higher interest rates in our industry means we're giving less money. And what that does is erode the power of somebody saying, I'm going to get a reverse to pay off my current loan. If I'm lending less money and they can't pay off their current loan, I can't do a reverse mortgage for them. So right now, I'd say about 35% of the people that ask about a reverse mortgage, maybe 40%, could probably actually get one because I can get them a loan big enough. But that still leaves about 60% that I might say, sorry, I can't get you a loan. And then they say, well, what else can I do? I'd say, well, there's one sure way to get money out of your house. Sell it. So I kind of want you to know that that's the situation with reverse mortgages and even regular loans for that matter. Because I do have older homeowners call me and ask me about like a regular 30-year fixed. And with rates being where they're at right now, qualifying is a problem. So I have the same conversation. If you really need to get to that equity in your house, you might just have to sell it. Okay. Now, somebody sells a home who maybe couldn't get a loan on the house they were living in, and then they sell their home and they got to get a loan to buy their next home. Oh, well, that seems kind of funny, right? I'm going to expect to get a loan to buy a home when I couldn't get a loan on the house I was in. Well, it all has to do with, of course, buying a less expensive home. And we'll talk about the reverse purchase loan as a tool to buy a less expensive home to help people get cash out of their homes. But instead of refinancing to get cash out, they sell and they buy a lower price home to get cash out. So we'll talk about that too. Finally, hey, last time I checked, there was about 100,000 active reverse mortgages in Southern California. Let me say 100,000 mortgages in California. About 53,000, I believe, is the active number of reverse mortgages in Southern California. That's a lot. So why would you care as a realtor, Ryan? Who cares? That's one less house I'm going to sell. Oh, but hold on a second here. What we have happening is we have people that have reverse mortgages. Number one, when they pass away, their heirs will almost always sell that house. Number two, people that have reverse mortgages sometimes need more money than the reverse mortgage is giving them, and they have to sell to get more money. The average amount of time somebody holds onto a reverse mortgage is about 6 to 9 years. So if you see somebody has a reverse mortgage on their house for 10 years, you got to say something's going to happen here. I have data for you on that, by the way. You can find those homes. But anyways, going back to my slide here of what I want realtors to know about reverse mortgages. Number one, people asking about reverse mortgages or any kind of loan right now probably really need cash flow. They don't want another loan. They're telling you, I need more cash flow. Well, with that, you got to know bullet point number two. We're giving out less loans to help that cash flow problem, which means more people asking about loans nowadays might end up being a home seller. Well, number three, we got to talk about helping people buy a home if they're going to sell a home. And then finally, we're going to see how to try to wring a listing out of a house that already has a reverse mortgage on it. In other words, when you come across a house with a reverse mortgage, I don't want you to think, oh, that really isn't any business for me. It's got a reverse mortgage. They're going to stay there a long time. That might not be the case. So I want to hone in on how we might be able to get a listing from these houses that we have reverse mortgages on already. Okay, so let's get rolling here. And by the way, I don't see anybody asking questions yet, which is perfect because we're going to get those questions answered. So you guys are all listening and doing well. Thank you. Okay, so let's refresh ourselves on a reverse mortgage here real quick. Hey, reverse mortgages haven't changed for a long time. The idea here is that if you were to get a regular loan to buy a home, you'd borrow money to buy a home or you'd borrow money to refinance a home, and the lender would put a lien on your title. You would get a statement every month, and each month you'd pay that loan back. That's how a regular loan works, right? Each month you pay a little bit back to that lender. And over 30 years, if you kept it that long, you would have paid them back. They take their lien off a title. So that's a regular loan, right? Literally just borrowing money and someone liens your house and then they take their lien off when you pay them back. The reverse mortgage is really the same thing. We're simply loaning money to buy a home or refinance a home. We send you a statement. It actually shows you what the interest is for the month. Here's the difference. With a regular loan, you need to send that in, right? Because they expect you to send it in every month. With us, if you say, you know what, I see that $2,000 is the interest for the month, but I think I'm going to keep that money this month. I'm not going to send a payment into the lender. What happens then? Well, if you owed $300,000 at the beginning of the month and the interest was $2,000 and you said, I'm not going to pay it, next month, we send you a statement, says you owe us $302. So really the only thing somebody has done by getting a reverse mortgage is given themselves the ability to say, instead of sending the lender money this month, I will keep that money in my pocket to use what I need to, and I will expect to have a higher balance next month when I see my statement, okay? So there you go. That's the reverse mortgage almost its entirety. Deferred interest that gets paid back later, okay? But when we do get paid back, we just take our lien off a title. It's not like we've taken ownership or that we're paying somebody for their house. We're just a lien on title that we're lending money on. And when we get paid back in the future, we take our lien off. So a client might say, okay, if I buy a house with a reverse mortgage, right? My realtor is going to help me find a home with a reverse mortgage. and I'm going to do this purchase. So what happens then if I live a long time, the house values go down. I have my reverse mortgage for 25 years and I've never made a payment, so I owe a lot more. When does this thing end? So does it end in 30 years? In 30 years, do you got to go get a new mortgage, or is it when you've missed or your balance has gotten too high or the value of the property? No, none of those things exist really. What we say is this: when you get a reverse mortgage, whether you're buying a house or refinancing, and you get your statement every month, you know how much you owe, you see what the interest is, and if you don't make a payment, your balance goes up. And we will let you do that really actually until you turn 150 years old. So you can get a reverse mortgage, never make a payment, your balance might be going up. In fact, if you have a reverse mortgage till you're 150, I'm going to say you're probably going to owe a lot of money. But it was never a point in time when we said you owe too much. You're past 30 years, the value's not there, it's upside down. We don't say that stuff. We literally look and see when you got the loan. Oh, this person got their loan 70 years ago and they were 80 when they got it. It's time for them to, I mean, silly, right? But that's actually what it says inside the loan documents, 150 years old. So there you go. You can buy a house or refinance a house with this reverse and stay until you're 150, no matter how much you owe or what's it worth or how much equity you have. Okay. How much equity do you have in a reverse mortgage home? Look at the statement when you get it every month. Oh, I owe 400,000. Okay. My house is worth 800. I have 400,000 in equity. You literally know every single month what your position is in that house. So here's a big deal. Here's why people buy houses with reverse mortgages and why some people refinance with reverse mortgages. Because we can actually get loans for individuals when they might not qualify for any other loan. So a lot of purchase loans that I do, I've been doing them for a long time, really. We got our ability to do our purchase loans in, 2010, right? I've been doing reverse purchase loans for a while now, okay, like 14, 15 years. And one of the reasons why I found people were doing reverse purchase loans is because they were having a hard time qualifying for a regular loan. Or they were trying to refinance, but they didn't have enough. And especially with a lot of people living on Social Security right now, and maybe something else like an IRA or whatever they may have, to qualify for a regular loan at these interest rates we have right now, it's tough. Tough when you're on a fixed income. So I get people coming in, they're like, hey, I can't get a regular loan, Ryan. Can I get one of your loans? And I'm like, probably 70% of the people I do loans for could never get a regular loan, but you might be a perfect candidate for a reverse purchase because I'm going to qualify totally different than a regular loan. I'm not worried about you making a mortgage payment every month. So that's totally different than a regular loan. So I'm going to have different income requirements. If you miss mortgage payments and your credit score is down, I don't really care about your credit score. I have a different set of underwriting requirements. So the whole idea here, and this is what I've said even sometimes to years I've had some people who said, Ryan, I just don't like reverse mortgage. That's it. And you'll never change your mind about it. And I'm okay. And they say, however, I can't get a regular loan. I say, well, you can get my loan. I don't really want that reverse. I know, but at least you can get my loan. Okay. And they do it because I explained to them, when you get your statement every month, if you don't want it to be a reverse, well, just make a payment on the darn thing. So the idea here is that we're giving a loan to people for them to decide how it's going to work for their benefit. Okay. We're giving them a loan for them to say, I don't want to make a payment and my balance will go up. Or I will make a payment and keep my balance the same. But at least I qualified to buy or refinance this home. And so that's what FHA is good at. It's good at keeping financing available for people in retirement when maybe their income isn't so hot. And by the way, I do see a couple questions popping in, and I will get your questions. Okay, but let's just keep on rolling because these classes they run long if I try to take too many questions in the beginning. Okay, so let's go back to my slide presentation here. So yes, qualifying. Sometimes we just do loans because people can get our loans. Okay, I'm going through a lot of this right now, right? Plenty of people want reverse mortgages right now, right? Maybe their income hasn't kept up with inflation. Okay, that makes sense. Things are more expensive. And they've just, said, man, I guess I'm going to try this reverse mortgage thing because it's really gotten expensive to live out here. Well, guess what's happened with our loan? Remember I said when interest rates go up, my loan amounts go down? I've had to tell plenty of people that I can't get you a loan because I can't get you a loan big enough to pay off your old loan. And they say, well, Ryan, what other options do I have here? What else can I do then? And so I'd say, well, it seems like loans are going to be out of the question for you at this point in time. So the one way I know how to get equity out of a house is to sell it. So you're going to be using a real estate agent to sell your home. Okay. However, I will talk about the reverse purchase loan with you because you might need a way to actually be able to get your next home if you're going to sell this one. And we'll go through a reverse purchase loan in just a minute. Okay, well, let's just talk about the refinance for a second, right? Let's just say that a client is asking about a refinance reverse, okay? You got to remember this. One thing you got to remember, right, is if I'm only giving loans to maybe 40% of the people that need one right now, when people ask you about refinancing or reverses, you got to stay in that conversation. You got to say, I know they're asking about a loan and I'm a real estate agent and I don't want to waste my time here. I need to find clients that want to sell their home. Well, what you might have here is the beginning stages of the seller. So you got to stick in the refinance conversation, even though it's not necessarily all that exciting for you. Okay. So let's talk about the refinance of a reverse. So when somebody wants to know how much can I borrow on a reverse mortgage? And this point doesn't matter whether it's a purchase or a refinance. How do we determine how much to lend somebody? I ask them how old they are, because the older you are, the more money I'm going to lend you. I ask you what your house is worth. Of course, we lend money based on the value. And then I look to see what interest rates are. Remember, the higher the interest rates, the lower the loan amount. So how do you get a reverse mortgage with a big loan amount? You got to be older, rates got to be low, and your house has to be worth a lot of money. So that's how you get a big reverse mortgage. But right now, our average age of reverse mortgage client is somewhere in the maybe early 70s. So they're not super old. They're pretty young in my book. Interest rates are still kind of higher than they were before. So our loan amounts are a little bit compromised right now. Let's run through one. Let's say a 75-year-old said, Ryan, I want a reverse mortgage. How much money can I get? I'd say, okay, you're 75 years old. Based on where interest rates are at right now, I can probably loan you maybe about 3%. Okay. So if you have a house that's worth $1 million, I'm going to say you can borrow $430,000. So for the person that owes more than $430,000, this loan's not for them. Now, how about that somebody owes maybe $350,000? I'd say, okay, you owe $350,000 on your house. I can lend you $430,000. That means we can definitely do a loan for you here. After I pay off the $350,000 you owe, you'll have $80,000 left. Approved for $430,000. I take $350,000 to pay your old loan off. You have $80,000 left. Or what would you like to do with that? You can leave it on what we call a guaranteed line of credit, which means it'll always be there to come back and get later. Or you could say, oh, Ryan, how about if you give me $1,000 a month until that money runs out? Ryan, how about if you give me 10 now and then 1,000? So the idea here is that the refinance, the reverse, it's kind of like a regular refinance. You're paying off your old loan. I'm putting a new loan in place. If you have enough money to get cash out, you can tell me how you want the cash out. Okay, let's say that this client said, okay, I started off and we paid the $350,000 off. So let's just do a pretend statement. The first statement says we paid off their $350,000. It's going to show the interest for the month, right? Let's say the interest on the $350,000 at 6%. I'm just going to pluck a number out there and say it's $2,500. So the interest for the month is $2,500. They owed $350,000. If they don't send any money in, they don't have to. Next month, the statement will say they owe $350,000 to $500. That's it. That's all they've done by having the reverse. Over here, remember they had $80,000 available? This statement's going to say you got $80,000. It'll be here the rest of your life if you need it. So that's how a refinance works, right? We're simply sending them a statement every month. The statement is always going to show how much they owe, what the interest is for the month. So that way they know what their balance will go to the following month if they don't send a payment in. It's always up to them. If they send $2,500 in, then their balance hasn't gone up. They actually don't have a reverse mortgage for that month. Okay? So that's a refinance. Lending based on age, value, and interest rates. Okay. I will take a second here to see if I can grab any questions here. And of course, I didn't put my glasses on. So, that's a really smart move, right? All right. But I think I see one question I can read here. Reverse mortgage works only for people 55 years and older. or can any age apply? Okay, that's a great question. I actually have a slide designed exactly for that question. But the short answer is you can get a reverse mortgage at 55. You can get one younger than 55, but you got to be married to somebody older than 62. I'll get to that in a greater depth coming up. Okay. So we got the basics of a reverse mortgage down. Hopefully this makes sense to you all. And we kind of learned how they can qualify in a refinance. We learned why people might do reverse mortgages, because sometimes they just qualify for this loan and they don't qualify for other ones. Sometimes they do want a loan where they can decide to skip mortgage payments because maybe that helps their cash flow. So we can see that people do reverse mortgages for different reasons. All right. Well, let's keep on trucking. Oh, let's see how much my loan amounts have gone down, right? So if anybody has followed us for the last, really about 13 or 14 years, we've been doing classes. I didn't have this slide in my classes up until about a couple years ago. Why? Because loan amounts didn't really change that much because interest rates are staying about the same, but we've had changes in interest rates. And remember I said that changes loan amounts. Matter of fact, interest rates are the main driver of our loan amounts. So let's say 2021, right around March, COVID was still happening. The Fed had dropped rates to zero, the federal funds rate to zero, to keep the economy borrowing money and to make money available and all that good stuff. So mortgage rates dropped, right? We were doing loans at 2.5%, just great loans. With interest rates being that low, a 75-year-old at that point in time could get almost 59% of the value of their home. Hey, that's pretty good. Because if you had a house worth $950, I could loan you $559. If you owed $425 on your current mortgage, your regular mortgage, I would pay that off. You'd have $134,000 left from the $559. There you go. Your reverse mortgage would start out saying, hey, we paid your $425 off. If you didn't decide to take any of that $134 up front, the line of credit side would say $134. And there you go with your reverse mortgage. What happens to it every month? I don't know. Depends on what the client's doing. Maybe they take a couple thousand off the line of credit. Maybe they make a half a mortgage payment. Maybe they make no payment. The only way to really know what somebody owes on a reverse mortgage, by the way, is to look at their statement. That's the only way you can tell. You can't tell by title. All right. Well, let's talk about 3 years later, 2024. And even though we've gotten a little break in rates, they've kind of gone back up, right? So if I have a 75-year-old that said, hey, I got a house, it's worth $950, how much can I borrow on this thing? And I would say, well, let's talk about your age, value, and interest rates. The only thing that's changed in this example, just so you can see what interest rates do, is the interest rate. Okay, we were at rates around 2.5% to 3% 3 years ago. Now we're at 6.5%, whatever it may be, right? So you see what it's done to the borrowing power, right? A 75-year-old in this example is only borrowing maybe 43 or 44% of the value of the home. So it's about 150 less, maybe about 140 less. That's pretty significant. So if this client owed $425 on a house and I can only get him a $420 loan amount, there's really no loan possible for him here because I can't pay off their old loan. And so indeed, this is what we've been seeing over the last 3 years. Just the interest rates have caused our loan amounts to drop unless people are getting the cash they need. And this is true of reverses and even regular loans, right? Interest rates going up mean that you could qualify maybe for a smaller loan amount on a regular loan because of your debt ratios. So the rising of interest rates has just hurt financing across the board. And well, maybe we see now why we have some more people selling homes is because in the absence of being able to get cash out of a house that you really need to supplement your retirement, you list the thing, right? So I would say, on that beginning slide, I usually say to myself, man, when I turn 60, is my number one priority going to be to move? I'll be like, not really. So I believe a lot of people that are selling their homes today that are retired probably didn't really want to do that. They probably were a little shocked that they were. And the only reason I say that is because you got to know a lot of people asking about loans think they're going to stay in their home. And so it's probably not fully worked through them yet that they might be selling. And so that's something, that you all have to know is people are going to sell their homes and not be happy throughout the whole process. And it's sometimes like me when I do a loan, like I do the best I can to do a great loan for someone, take care of them, make sure they know everything about it. But sometimes they're not going to be like super excited throughout the process because they're like, wish I could have done something a little different. But you do what you got to do, right? We do what we got to do. Let's talk about reverse purchase, because back here we have this person here, 75 years old. And I said, look, I don't think any loans are going to work for you to get cash out. And they say, but I really need to get cash out. And I say, well, maybe you got to sell. They say, well, okay, if I sell, how can I rebuy and what does this look like? So here we have our 75-year-old. They've sold their home, y'all, and now they need to buy a new house. And I'm going to look at a reverse purchase for them. So reverse purchase loan. I need to know how old they are. 75 years old. Here we have, you sold their home that they were in, right? Because they decided they need to move or get some cash out and they had to sell it. After you sell their home and they pay off their old mortgage, they net 470, right? That's their net worksheet. So we'd say, okay, now you go out and find a house. You got to find a house and you don't want to spend all 470. You got to keep some money in the bank. You want to make sure that you don't put yourself in a position where maybe you have to think about moving again, right? You want this to be your final house. You want to make sure that you can look at long-term. Can I afford to stay in this house? Am I going to have the right tools to succeed for the rest of my life? So of course we know the solution is going to be a smaller house, downsized home. Maybe it's a bigger house farther away. Maybe it's a smaller house where they're at now. Whatever it is, they work it so they can find a house that's 600 in this case. And based on their age, interest rates, and the $600,000 value, I'd say I need you to put down 340. I'm going to give you a loan for 260. Okay, so where does that leave me at, Ryan? I've used a reverse to buy a house. I've managed to keep $130,000 in the bank from the sale of my previous home. I've been able to qualify for this loan, and I can decide if I'm going to make a mortgage payment again. Maybe I'll pay 6 months and take 6 months off. It doesn't matter in our industry what a client wants to do. They should design the loan to work for their cash flow. Maybe they don't want their mortgage going up every month, so they're going to throw some money at it every couple of months. Maybe they don't care and they'll just let it go up every month and doesn't bother them because they want to keep all their money in their pocket. It's up to them, really. We're just providing a tool where they're able to qualify to buy a home. Once they buy the home, they can keep some money in the bank and they can decide if they want to make mortgage payments, and they can stay in there until they're 150 years old. Okay, so those are the points I'd say that matter to someone looking at using this financing to buy a home. All right. Let's talk about somebody that wants to get a reverse purchase loan. I mean, just like a regular loan, we want to pre-underwrite them and make sure they're going to qualify, right? But we qualify different. I keep saying we can get people loans and they can't get any other financing. How do we do it? Number one, we don't use machines. Like a regular Fannie Mae loan, you use realtors. You guys know, hey, where's your DU approval, buddy? We want to see that they're approved. And that's a machine, okay? We don't have that stuff on our industry. We have people. And fortunately, we have FHA, which is pretty generous in the fact that they want older homeowners to be able to get loans. So they take excuses when there's problems, right? Like the dog ate my homework, okay? The dog ate my loan application, right? Literally, FHA says, Ryan, when you come across people who maybe don't have as much income or they have credit problems, find reasons why, and we will listen. At least the DE underwriter that's approved by FHA will listen to whatever excuses I bring. And if they work, if they fit the situation, all of a sudden the client that had a 500 FICO score looks like an 800 FICO score. The client that only had 1,200 in income, didn't matter whether they had 1,200 or 12,000. We're trying to get the lowest income we can to work with the worst credit. That's what I think our industry is good at doing. So how do we do that? Quickly, I'll tell you. Number one, for income, you don't have to make a mortgage payment with us. So we want to know, can you afford to pay your tax insurance, keep the lights on, and eat? That's our formula for success. So tax insurance, let's say there's $6,000 a year divided by 12, you got to have $500 a month. FHA thinks it takes $500 a month to take care of yourself. That's $1,000. We use a formula, a VA formula, to figure out utilities. It usually comes out to be about $250 a month. So this client here that's buying this $600,000 home, maybe $1,250 a month is what they need in Social Security income. That's not much. If they're getting a regular loan, you probably need to triple that to be able to get this loan. So that's where we help with income. What if your credit has issues? I can tell you, I'd see a lot of bad credit in retirement. Okay. You get a collection from a medical account you didn't realize. You had an expense come up and you missed some mortgage payments. All these things happen to us in retirement when our income is what? Lower than it's probably been since we started working. So you're being thrown problems that are big problems, and you have a very low income. People are going to miss payments on things. Again, FHA says, okay, we're not going to look at the score. What we're going to look at is whatever happened to you. Do you have a good reason for it? Like, did somebody go to the hospital? Did you get sick? Did your husband get sick? Did your kids get sick? Did your dog get sick? Did your refrigerator blow up? Did your roof leak? Did your car break down? Did your plumbing go out? What happened that you missed payments on things? And when you have a reasonable excuse and we can show it's correct, then we can erase the bad credit. Now, there are times when, I've been in these loans for a while, long time, 17 years. And sometimes an underwriter is like, Ryan, you have given me every excuse in the book for this client. None of them are working for whatever reason. I'm like, great. So you're not, what are we going to do here? Well, FHA has given me a lifeline. It's called a life expectancy set aside, which is basically like an impound account for a reverse mortgage for the lifetime of the client. Why does this work to erase bad credit? Because our biggest concern about reverse mortgages are clients don't pay their tax insurance. So if we have a method of paying them for them, then we care less about the credit again. Same thing with income. Remember I said that client needed $1,250, for example, on a $600,000 purchase, but maybe they only got $800. Oh, okay. Well, remember the tax insurance were part of that $1,250. So if we have a life expectancy set aside, we're paying tax insurance for them, income can be less. So this thing's kind of like a catch-all. For income or credit I can't get around, this thing's a catch-all. But there is a catch with the catch-all, I guess you could say. And that is, we pay the tax insurance out of your equity. So if you've got to have equity in a home to pay tax insurance, we're going to need a little more equity, or we're going to give you less cash out to make up for it. Or if you're buying a home with a reverse purchase, you're going to put more money down. But it still works. It's just a little bit rougher. Okay, if a client wants to buy a house, reverse mortgage, or refinance, they got to go through counseling. We give them a list. They hop on the phone. It takes about 40 minutes. They get a certificate that says we've been through reverse mortgage counseling. Okay, my goal here today is not to make you reverse mortgage underwriters. What I'm trying to display to you all today is that we just have a way of getting loans for people that no other type of loan has. And on purchases, that's super important. So at the end of the day, a client wants a loan. We're really just, we have a different way of trying to make sure they're going to be successful in that house. This telephone number here is for realtors only. You call this whenever you all want, 7 days a week. Somebody usually answers the phone at my office and we'll say, what can I do for you? You might say, Ryan, we met this client today. It looks like they might need to sell, but we're worried about they have a question about a loan. Or Ryan, somebody asked me about a reverse mortgage. What do I tell them? Like, we want to make sure that you're getting questions answered in real time, because I don't want that client to leave your wheelhouse. Because remember, people asking about loans may end up being listings. So we need to make sure we get them handled and you don't let them out of your wheelhouse, your site. Okay. So that's what number is for you all. Okay. Let's buzz through this real quick. Why do people sell homes when they don't want to, or get reverse mortgages, or get cash out refinances? Because half of retired Americans are living on $29,000 or less a year in income. It's not going to do the job. Okay. Social Security is not going to do the job. Our bills are more than that. And so we need to get equity out of these homes. And we have lots of equity in these homes. So why not find a way to shave off some of that equity to help our retirement? That might be selling a home, refinancing a home, whatever it is. We just don't have a ton of income. Okay, this is important right here in terms of finding a few deals, right? Because the life of a reverse mortgage is something I want you all to know. So maybe you can insert yourself, and we can help to insert you into a reverse mortgage home and you get a listing. So there's two ways that happens. Let's talk about the first way. When a homeowner passes away with a reverse mortgage, the heirs should inherit the home. Now, when they inherit the home, they can say, I want to keep it. Okay, well, go get your own loan, buddy. Remember, we're just a lien on title. Just refinance and get us off title. We just want to get paid back. Okay, simple as enough. We don't care how much a house is worth. We just want our money back. In this case, $600,000. Get us that money back, and we will remove our lien off of your title. Most of the time, I'm going to tell you a high percentage of the time, like the high 90s, in my experience, those heirs get this house and they sell it. So you need to be there for that listing. We'll talk about that in a second. An heir can get up to a year to do either one of these things, but they don't get it automatically. They have to earn a year. In the beginning, we only give them 6 months, assuming they call in with the right paperwork. If they don't have their paperwork done properly, they only get 30 days before we'll foreclose on them. So I'll talk about that more in a second, but just understand, sometimes heirs have problems getting control from the reverse mortgage company, and there's something you all can do about that, okay? I think I mentioned in the earlier slide, about 53,000 active reverse mortgages in Southern California right now. In my research, okay, about half of those heirs look like they're going to have a problem with this reverse mortgage home, and that's your opportunity. Talk about that in a second. I did see another question pop in the chat, and I'm going to get to that question in a minute. Good question, by the way. We'll get there in a second. Okay. Hey, if a house upside down, which, man, I don't know when the last time I saw a house upside down, even if it had a reverse on it. But if a house does end up upside down and it has a government-insured reverse mortgage on it called a HECM, a home equity conversion mortgage, the heirs will still inherit that home, and they can actually inherit it with 5% equity, even if the parents are upside down in the reverse mortgage. Why? This loan is FHA insured. And FHA says, hey, heirs, this loan has had FHA insurance on it. We're going to help you out. Your parents owed $750. They were upside down. You just pay off $665. In other words, FHA is going to write down the loan, not necessarily write it down, but cover the difference between what your parents owed, plus give you a 5% equity to kick. So if there's a government-insured reverse mortgage called a HECM on a house, the heirs should really never have to worry about inheriting an upside-down home. They're going to get that house some equity, and they can decide what to do. Keep it, sell it. It's up to them. So this is what happens over the lifetime of a reverse mortgage, especially if the heirs do nothing, okay? So let's talk about this for a little bit. First of all, when people have a reverse mortgage home and they pass away, how do we know? We don't expect anybody to call us. No, what we have is we have access to something called the master death list. That sounds great. No, actually, it's awful. It means you passed away. I don't want anybody on that list. But our borrowers do end up on the master death list, and we check it regularly. When we see that both borrowers that had the reverse mortgage are on that list, we send a letter out. We say, hey, whoever is there at that house, hello, heirs. We understand the last remaining borrowers passed away. You have 30 days to get a hold of us, or else we will start foreclosing. Yeah, we got to get our money back, and we don't want to just sit around without knowing somebody's there. Heirs, step up, call us. Hey, what's up, heirs? Yes, I am the heir, and I do want to sell this house, or I want to keep this house. Okay. So the idea here is that if somebody does nothing, though, after 30 days, we will start foreclosure. 90 days later, we'll go to notice of sale, right? So it goes 30 days, notice of default, notice of sale. That's about 140 days after that letter has gone out. If nobody does anything and doesn't get a hold of us, the house could end up at auction. Now, if the house sells for more than what we're owed, again, that's not our money. We'll escheat it to the state if nobody shows up, or we'll give it to the estate. So that's what happens when we just don't hear from anybody. If we hear from somebody and they don't, let's say the house is upside down and the heirs are like, hey, we don't care about getting that deal where you guys wipe off the upside down portion. We just don't want the house. You can short sell it as a realtor. Okay, but let's go through what really happens and where some opportunity is for you all, okay? When the heirs pass away, they get that letter. They call up, right? Hey, this is so-and-so. Yes, my last parent just passed away, and this is what I want to do with the house. And you got to understand, a high percentage of the time, from what I can see in my research right now, and just from what I know of incoming calls, this is what we do to the heir. We say, sorry, heir, you are not the right person to call, and we cannot release any information to you. And the heir says, what do you mean I'm not the right person to call? I'm the only child, or something like that, right? Something where it's just totally ridiculous. But the reality is this happens. Because as a reverse mortgage servicing company, we have to be darn sure who we're talking to is authorized to speak on behalf of the estate. And a lot of times paperwork is not done properly. So we won't talk to them. And now the heir starts to panic a little bit because they're like, you guys said in 30 days you're going to foreclose. Meanwhile, you won't talk to me because something is wrong. And they just start to, right? That's a terrible thing to have happen to you after you just lost your last parent. And now you feel like the mortgage company's messing around with you. We're not. We're trying not to get sued. We're trying to make sure we have the right person on the phone. So this is where the problems lie, and this is where you can do something about it. Because as I mentioned, I will give you logins of software. You can find all the reverse mortgage homes around you. And we can help you figure out which heirs are going to have a hard time doing this. We even already have a letter inside of our website you can download to send to them. So you literally could just spend 15 minutes and put together a little marketing campaign with the things we already have made for you. So, but let me give you a little education on how we fix these things. So number one, sometimes heirs think because their parents put their house in a trust that everything is hunky-dory. You know what? In a reverse mortgage loan, we say, if you put the house in a trust after the loan and you haven't told us about it, we're not happy with that. And we're not going to coach you through what you have to do. We're just going to say, sorry, we can't talk to you. Why? Because we don't know what the trust looks like. We don't know who had the authority to put the house in the trust. We don't know anything at this point in time. And meanwhile, the heir is thinking, you can't do that to me. I'm the trustee. I'm the successor trustee. I'm the beneficiary. So that may be the case, but your parents signed a note that said they won't change title around, and they did. And we can just start foreclosing, actually. Right? There's a problem you all can solve before we get there. What if the family had a will and no trust? Okay. A will does, by law, put a representative of the estate on there. But if we've never seen the will, then we're just not going to talk to anybody. See, these are problems, right? If the will is on file with us, we'll talk to somebody. What if the kids are on title? If the kids are on title before we do the loan and we keep them on the title, which we can, of course we'll talk to them. What if the kid adds himself to title after the parents pass away and we didn't know about that? Okay. These problems are everywhere, and I see it all the time. I get calls on this stuff all the time. You can find where all the problems are at before they happen, and then use our letter, make your own letter. Let those borrowers know you're doing them a service. Your reverse mortgage home is in jeopardy of being foreclosed on when you pass away unless your heirs do this. So there's some opportunity out there. That's one way you get listings from a house that has a reverse mortgage. Put yourself in the position to help the heirs and then be successful with that. Okay. I'll talk about the other way to get it in a second. Okay. Let's take a quick review. No, we don't own your house. We don't want your house. I don't even care about your house as a reverse mortgage industry. I just want to get paid back. That's it. Heirs, just get your own loan and pay us back or sell the house, because we can't just take the home. It's not our home. We're just a lien on title. And then down below, this last thing, I kind of talked about this already, but somebody that buys a house or refinances a house or reverse mortgage, hey, buddy, just don't live past 150 years old. And I'm not going to care. I'm not going to care if you never made a payment and you owe a lot of money. I'm not going to care if the house values crash. I'm not going to care about that. I'm just going to say, yeah, you 150 yet? All right. Enjoy. But this is how you do foreclose on with the reverse mortgage. And I saw a question come up in the chat that kind of how to do with this. So hopefully this gets you answered. Okay, one of the ways you can get foreclosed on with a reverse mortgage is if you don't occupy the home as your primary residence. What does that mean? Every day, a week, 6 months? Like, there's all kinds of things out there. Here's what I can tell you. There is no set time frame per se. You could actually be out of a reverse mortgage home for a year and just come back for 1 day and still be your primary residence. What do we want? The borrowers to communicate with us. People to call us up and say, yeah, I'm going to be gone for 6 months. Like, communicate with us. Also, look in your mail. We send an occupancy cert once a year. If you fill that out and send it back in, we assume everything's hunky-dory because you say you're there. So This rule can get somebody in trouble, but on the other hand, it's very easy to deal with this rule and not have to worry about it. So, right, knowledge is key. Okay, don't be afraid to communicate with the reverse mortgage servicer on what's happening with you, because you got time and you could be out of the house for a while. So it includes like nursing homes, rehabs, things like that. You got sick in the hospital, you went to a rehabilitation center. I mean, I have that happen all the time with clients. And I say, okay, when's the last time you got your occupancy cert? If you didn't get it and you don't remember, they might think you're gone right now. Let's call up the servicing company and let them know you're here and you're okay. That's how we control that. But a year, if you're gone for a year, that's when you could potentially be foreclosed on. Okay, if you don't pay your tax insurance, you'll get foreclosed on, or your HOA dues. Now, remember, if you have that thing we call the life expectancy set aside, then we're paying your tax insurance for you. So then you just got to watch out for your HOA. Keep the house in the condition it was when you got the loan, right? If you have broken windows in that thing and your neighbor doesn't like you, they can figure out who the servicer on your mortgage is on the internet. And then they can send a letter and says, hey, you know what? This house that you have a reverse mortgage on, it's got broken windows. And then we're like, uh-oh, we'll actually come check it out. And if that's true, then we can put it into default. So just keep the house in condition it was when you got the loan, and you won't have any problems with that one. Okay, the neighbors, I can't do anything about. All right. I said we lend money based on age, right? So, and interest rates. Well, you don't memorize reverse mortgage interest rates every week. I mean, I do, but you don't. So how are you going to know how much someone can borrow when it's changing constantly? Well, we are updating our app. Many of you probably might have our app already on your phone. If you do, it still works fine. For those of you that haven't downloaded our app, you got to wait about 2 weeks. The app will calculate a refinance or a purchase loan for you. It'll get the current rates for that day from our office. So we update the app so it's correct for you. You put the ages of the clients in there. You put the value of the house, whether it's a purchase or refinance, and we're going to tell you how much we can lend. Okay, let's talk about ages. For an FHA insured reverse mortgage, remember that's called a HECM, a home equity conversion mortgage. Whew, I've been saying that for 17 years. For an FHA insured reverse mortgage, you got to have one spouse 62, but I don't care how young the other spouse is. I'll still protect them so they can stay in the house the rest of their life. It's called a non-borrowing spouse. However, we lend money based on age. So if you're an old spouse, you got a young spouse, you're going to get a lower loan amount. Okay. If I don't know, if you're single right now and you're thinking about getting married and you want to get a reverse mortgage in the future, my professional advice from a reverse mortgage standpoint is marry somebody your age or older. That way you always make sure you're getting the biggest reverse mortgage loan amount. Okay, if you're not married to somebody and you'd like to do an FHA insured reverse mortgage, that's cool. You don't have to be married, but you remember, being married was what allows one of you to be under 62. Okay, by the way, this figure will change at the end of this year. So let's just talk about the idea. Basically, FHA says as soon as a house is worth more than $1.149 million, we don't care. In other words, FHA is going to say, look, if you have a $10 million house, I'm still going to lend you the same amount of money as if your house was worth 1.14. Because FHA doesn't want to insure huge loan amounts. So they're just going to check out and say, whatever, you're not getting a big, giant loan amount, right? Well, okay. The private industry says, hey, we'll jump in there. As soon as you start getting into really expensive homes, I'd say probably going to be like 1.5 or more. A non-FHA reverse mortgage will get you more money, and you can start using those at 55. So you can buy a house at 55 years old using a reverse. So remember how I said the average age of a home seller is starting to drop from 60 to like 55 to 60? So you actually have 55-year-olds that are selling their homes. And I don't know, maybe they're doing it because they can still qualify for a loan at that point in time while they're still working. But maybe some of them could stand to use a loan to buy a house, even if their income is not great at 55 years old. Interest rates on a government insured reverse mortgage on a purchase or a refinance are both are the same. About 6.25% for a FHA insured reverse right now. It's kind of what a normal loan is, maybe off by 1/4 to 0.5%. Your non-FHA loans are in the 8s right now, so they're a little higher for non-FHA reverse. FHA insured reverse mortgage have mortgage insurance on them. That makes them more expensive, right? Up front, 2%, 0.5% annual. Those are the costs on FHA reverse mortgage. Okay, let's talk about a little more idea here with people selling their homes and what you might want to know about it. Um, when heirs inherit houses with reverse mortgages on them, they sell them, y'all. So know where those reverse mortgages are. If they're in your area, your farm, your neighborhood, I want you to see how long they've been holding that reverse mortgage for. If it's like 10 years, something's going to happen. So you want to start communicating with the people at that house. You can use our newsletters to do that. They're on our website. Heirs might have a hard time working with the servicer. So they need to make sure their paperwork is in order. We have a letter on our website that you can do that with. So I want you to get to list reverse mortgage homes before the other agents who aren't watching our video are joining me today. And we have tools on our website to help you find the reverse mortgage homes and then letters to send them. I always say keep it tight to where you're within, right? Because the touch rule still applies. You still got to touch these people several times for them to be familiar with you, to know you're local and that you're going to help them. Okay. This isn't necessarily a campaign where you start marketing all over California. It's not going to work. Keep it tight where you're at, your neighborhood, etc. Find those reverse mortgage homes and communicate with the people to know that you can help them. You can help their heirs. Okay. You can help them make sure that this house is going to be dispositioned properly. They may not realize it already. Let's see. People, of course, that can't get loans or having a hard time with bills, they're selling their homes because they can't get the cash out with the way loans are today. They may be able to get a reverse mortgage, but not as high as percentage as they used to. And here's the thing. Some homeowners that have reverse mortgages, they used to be able to refinance the reverse mortgage to get more cash out. Okay, guess what? Rates went up. I cannot refinance as many people that I used to be able to from one reverse mortgage to another simply to get cash out because interest rates mean lower loan amounts. So refinancing doesn't work. There's a lot of people that have reverse mortgages right now that are still kind of tight on cash. So again, in your area, tight area where you're at, I would be sending them our newsletter that's asking me if they're tight on money. It's in our newsletter. And one of the things that's in there is you can buy a house with a reverse purchase loan because these people that have reverse mortgages that might be tight on cash, even though they have no mortgage payment, they might be tight on cash because they've used up all the money that we gave them. If they downsize to a lower priced home, they free up more equity. So those are people that already have reverses that might need to sell. Okay. We'll give you logins at Title Pro 24/7. If you don't have one already, we'll give you free login. It allows you to get in there and pull some data. You can follow along on my videos to see how I pull data to find distressed older homeowners. And then if you want to hop on, the way I wrote these newsletters are to speak to an older homeowner that might be tight in cash. It's not like a newsletter that is just about, I don't know, we're almost at Thanksgiving. It's not about like how to baste a turkey, right? How to keep your turkey moist for Thanksgiving. This is written for older homeowners to say, yeah, this is kind of me right now. Yeah, property taxes. Yeah, I'm kind of tight on cash. Oh, I can get a loan to buy a home with no income or low income. That's great. Oh, I can use Prop 19 to transfer. Oh, great. Oh, I have an all cash buyer that's knocking at my door. Should I talk to them before a realtor? Right? Is now the best time to sell as an older homeowner? So these articles are just written to speak to an older homeowner that might be considering moving or selling because they're tight on cash. And they can just use them. Use my software, figure out who the distressed older homeowners are, and then drop them a newsletter. I give you 3 of them, and you can drop them on every week and see what kind of response you get. Have some fun with this stuff, y'all. Let's see. On my website, there's a refresher course for what we've done. So here's the idea. And I've been saying this for about the last couple of years, and it really does still apply. Because, by the way, this is how I go out and find houses that I want to buy. This is how I find houses where people might need loans. Okay. I look for the older homeowners that are saying, how does a reverse mortgage work? Because what does that mean? I need cash flow. I look for the older homeowners that are saying, hey, what are interest rates at right now? I immediately, my ears go up. I'm like, well, you know, interest rates are high. You must be asking because I think you need cash. So we have to just, of course, remember, there's always 2 things, right? There's what people are saying, and then there's actually what they're trying to accomplish. And sometimes those are 2 different things. Have you had an older homeowner walk up to you recently and go, hey, are you a realtor? Because I'm super tight on cash. And even though I don't want to sell my house, I'm going to list it with you right now. Like, and right, no, that's not going to happen. Instead, we're looking for these clues. pull up the distressed older homeowners with the software, and then drive around your neighborhood and see which houses are in bad shape. Something going on there. Hone in on those things. Use some things that are not like talking about selling your house to get them to talk to you. My newsletters specifically don't talk about finding a listing agent or how they're going to sell their house. It talks about how to solve money problems, which is what they want. And then you just give them that information and they may reach out to you on that. Okay. So, all right, everybody, you hung in with me for an hour on a Friday afternoon. And I really appreciate that. I can't wait to be back inside the Laguna Hills office live again soon. But in the meantime, I'm glad you guys hopped on. And I will continue to monitor and look to see how I feel you can get something or try to get some business from an older homeowner. But it certainly involves all of us working together. Reach out to us. My cell phone number is on the screen. You can text me. I'm local to you. Obviously, we're right here working together. So you can text me and I respond quickly. You can call the 888 line, even on a Saturday afternoon. Somebody will usually pick it up. And in this way, we can get their questions answered quicker and hopefully get you one step closer to finding out, is this somebody who's going to be my client? Okay, how do you get a copy of the PowerPoint? I think this time, since the Orange County Realtors is recording it, you have to reach out to them. Maybe LC can get it for you, because I'm not recording it this time. Okay. Any other questions, y'all? I mean, please pop them in the chat right now. And we finished right on time at 3:00, and just about everybody's here. So I know people like when other people ask questions because sometimes they didn't even know they should ask that question. And so pop in a question here because, otherwise I feel, a little lonely too. I mean, I know you're all there, but I certainly like questions. Let's see. Thanks, Ryan. Oh, you're welcome. Hey, I like a thank you. That makes me feel super good. Nothing better on a Friday than to feel like I got you guys some information that might lead you to some business, right? So if you like the class, you're welcome. Thank you for the thanks. It actually is. It's how I don't get paid by teaching, by the way. I wish I was like so good that the board's like, hey, we're going to pay you $500 to teach this class. It doesn't work like that. So I'm here to try to help you all. Maybe I get a loan out of it at some point in time in the future. But truly, I'm trying to find a way to help you all get business, because if I think I get you some business, then I think maybe I might get a loan out of that situation eventually. Where do we get the newsletters? Great question. So we're going to email you. We should be emailing you. Hopefully OCAR does. If not, you got to reach out to us. We're right here, Reverse Mortgage Educators, and we will send you logins for our website and logins also for the software, the data software. Maybe what you might need to do is put your emails inside the chat box right now. That way, Maritza, my assistant, can grab your email, because we're going to email you logins for the website to get all the newsletters and all the marketing materials, and then another login to get into the lead generation software, right? And that's where it starts to get fun. I mean, I like sitting on the couch on a Friday evening using the software. You can watch and do exactly what I do. I draw a ring right around where I want to do business at. I tell it to find certain parameters, and the parameters are inside the video. It's like the recipe to find business. So follow my recipe and put it into the software, and then it'll spit out some people who are likely to either be distressed or need some help. And then go to my other website and grab the newsletter and drop it on their doorstep. It's going to have your name on it. It's pretty easy. You could probably do all that in about 15 minutes and get yourself a relationship and possibly even a lead out of the deal. Okay, because that's what I do on a regular basis. So give that a shot and have some fun with that. Let me know how it goes. Let me know if you got something. Even if it doesn't turn into reverse purchase or anything, reverse mortgage, that's all. I don't care. If you made a relationship that has the potential to get you some business later, that makes me almost as happy as doing a loan, because at least I know that we got some good information going out there. So please let me know how you do with that. And again, pop your emails into there, or you have to let OCAR know that it's okay for us to email you all those logins, right? Because that's what we have to do. All right, I got a question here. I think it's Shirley with my blurry eyes. If you have a reverse mortgage, let's see if I can zoom in. No, I can't. There we go. If you have a reverse mortgage and you move to assisted living, can you rent your home? Okay. So I'm going to give you a good news and bad news, Shirley, on that. If you have a reverse mortgage and you've got to move into a listed living facility, you can be gone for a year. So then you might say, I wish I could make some rent on that property. Well, you can rent rooms out. So you just can't rent the whole thing out. So rent a couple rooms, generate some income for yourself, or your heirs can rent some rooms out, generate some income, and then still, though, know that you have to communicate with the servicer that it's your primary residence and you'll be back there, right? You just have to go back there is the key. You got to go back there before a year is up. So surely that's kind of a 50-50 answer, which is you cannot leave permanently and rent the entire house out, but you can leave and have the rooms rented out. Hopefully that's a good tweener. Okay. Good question though. I like that question. Thank you for asking a question. All right. Any other questions here that I can pop in there and ask? Anybody else want to drop their email in there for Maritza to email you the logins for everything? Please do. And so we can keep you guys in the loop. Anything else we got here? Let me look at my chat box. Don't see anything else here in the chat box. And I don't see anything there. Oh, by the way, so Elsie did put inside the chat box, I believe, the link, the YouTube link for it to be posted so you guys can rewatch it. Okay. So there you go. And you can always reach out to me direct. Again, my cell number and our 888 line is right there on the screen, or our office is right in Irvine. So we're literally right in your backyard. So I'll leave this up for a little bit longer so people can get their address in there. Thanks. She just put the link on again. So she's working hard for us today. All right, everybody. Other than that, I would say have a good weekend. Hey, here's something, right? Okay, so I don't know that we're going to get you the logins by this weekend. Otherwise, I'd say it'd be fun for you guys to hop on Saturday and see if you guys can dig out something that turns into some business for you this weekend. That would be super cool. I don't know. I'd be happy to see that. But how about next weekend, right? Next weekend, hop in there with the stuff that we give you. Follow my guidance and see. Maybe at one street over, you got somebody that's had a reverse mortgage for 10 years and the house is put in a trust after the reverse mortgage. Man, that has so many things for you to talk to those people about. And I have letters specifically written already into the website for that. Dude, you might literally be in that house quicker than you know it, talking to the heirs. It's there. Maritza, are you still there, by the way? I think I lost Maritza. Okay, which means I need to copy all of your email addresses so she has that. I lost Maritza, everybody. I hope she's okay. So I'll just make a copy for her. All right. Any last emails that want to pop in there? Please do so. Otherwise, we will be calling it a day. Ooh, you know what? I need to get all those emails. I got a little work to do, y'all. 2 new messages. Let's see. I got 2 new messages in here. Oh, you're going to save the chat for me? That's super awesome. Okay, Shirley, you're welcome. Thank you for asking your question, Shirley. And you guys, let's get out of here, man. It's Friday. The sun's kind of out. Nice little breeze out. Oh, wait, hold on. Okay, copy the PowerPoint. I got that answered. If you have a reverse mortgage and move to assisted living, Shirley, I got that for you. Reverse mortgage, 55 years and older. So hopefully that question was answered.